Happy Friday. This is All About Bitcoin, a show dedicated to all things, questions, and markets related to Bitcoin, a little b for the currency, and Bitcoin, big B for the network, a collective journey to understand, apply, and use this innovation, all Bitcoin, all the time. I'm your host, Christine Lee. Let's have a live look at Bitcoin right now. The CoinDesk Bitcoin price XBX index is currently trading at $37,100, about $50. Bitcoin is down about 7% over the past 24 hours. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as the leader in crypto news, events, and data.
The chart of the day is brought to you by Crypto.com, the world's fastest growing crypto app.
Institutions are buying the dip. Blockchain data showing large investors remain confident of Bitcoin's long-term prospects and continue to accumulate coins during price pullbacks, shrugging off concerns about the negative environmental impacts of cryptocurrency mining. Wallets linked with over-the-counter or OTC desks registered an outflow of over 10,000 BTC on Wednesday when Bitcoin tanked from 43,000 to nearly 30,000. That was the largest single-day outflow from OTC addresses in 3.5 months, according to data tracked by Glassnode. The number rose further to over 11,000 BTC on Thursday, hitting the highest level since December 31st and taking the 6-day tally to nearly 35,000 Bitcoins. Institutions or large investors typically make investments through OTC desks to avoid influencing asset prices on exchanges. Thus, outflows from OTC desks are widely taken to represent institutional buying, that is, large traders moving coins from OTC addresses to their wallets. And joining me to discuss BTC price and other Bitcoin news is our Week in Review panel, CoinDesk Managing Editor of Technology, Christy Harkin in Toronto, Managing Editor of Markets, Brad Cowan in Austin, and Director of Data and Indexes, Galen Moore in Boston. Welcome, everyone.
Hello. Thanks, Christine. Good to be here.
Thanks, Christine.
The CoinDesk Dream Team. All right. So, Galen, you've been tracking trading volumes. They've caused outages on several exchanges. What do you make of all this activity?
Look, Christine, I think the events of May 19 were good for Bitcoin. And here's why. Bitcoin proved itself. It saw its second biggest volume day of the year. That's not the OTC activity that we're looking at on this graph, but volume on the lit markets. And market infrastructure, I'll say it bent. It was not without problem, but it did not break. There was not that kind of, sort of flywheel effect of liquidations, crashing the spot market. It was an orderly sell-off. And I need to note here that we presented this chart on Wednesday with an error in which the May 19 column was duplicated. Our apologies. The bottom line, though, is that Bitcoin markets are mature enough for large investors and OTC desks who need to trade on vetted markets in these volumes. And speaking of institutional participation, I'll be talking with custodians that serve the institutional market, Anchorage, Zodia, and BNY Mellon, on the topic of crypto custody, which is actually the most interesting topic in crypto because crypto, as we know, is a bearer instrument. So I'll be there on Monday at Consensus 2021. And if you want to learn more, you can find out at coindesk.com/consensus.
Yes, Consensus, very exciting next week. All right, Brad, with the very terrifying. Brad, with the markets, though, we're seeing a sell-off again today. People have blamed it on Elon. People are blaming it on China or over-leveraging, which seems more of a data-based argument to me. But what are your thoughts?
Well, we had been reporting for the past, couple of weeks that the charts were starting to turn a little bearish, and we had started seeing signs. Of course, we had a big sell-off last week, and this is actually the second week in a row we're down 20%. And I'm just looking, it's 37% if you add it up. And we haven't seen a decline like that on a 2-week period since March of 2020. So yeah, this has been a really big retreat, it sort of really has changed the tenor of the talking points in the market in terms of 2 weeks ago, things were back to normal. We were maybe headed back toward an all-time high. And Last week it was kind of changed, and now it's very different. We're back in the 30s. It's been a big sell-off, so it could take, it's going to, the $65,000 all-time high is looking pretty far away at this point, and, and serious questions now whether the bull market is done. Where are we going from here? It seems like it's going to take a lot more hope, I would think, at this point. And, the Elon Musk stuff, kind of whether you agree with Bitcoin being an environmental disaster or not, it's something that, all institutional investors who maybe were planning on getting into Bitcoin are going to have to address now because of, ESG concerns are a huge deal in traditional markets these days. So it really could slow the Bitcoin adoption.
Yeah, and just to remind viewers, Elon Musk tweeted earlier that Tesla was going to suspend payments, Bitcoin payments for Teslas, and that's triggered the sell-off we're seeing now. He's also tweeting about the Lightning Network, and we've got the tweet up here. He's saying that achieving truly decentralized finance, power to the people, is a noble and important goal. Layer count depends on projected bandwidth and compute, both rising rapidly, which means single-layer network can carry all human transactions into the future, in my opinion. For now, Lightning is needed. Christy, he's talking about the Lightning Network now. What do you make of his comments?
Well, I agree with Elon Musk on this one. Phew. Layer 2 solutions like Lightning, they definitely offer fantastic solutions to Bitcoin scaling problems. You've got the Bitcoin blockchain, that's the base layer, and it's kind of slow and clunky, and there's only room for like 250 bytes of data in every block. So you're trying to cram a lot of stuff into these blocks, and by having these second layer solutions like Lightning, it's kind of like taking that little side street off of your super busy highway that's full of rush hour traffic. It's cheaper and it's faster, and it takes the load off of Bitcoin and allows some sort of scaling to happen. Keep in mind that Lightning and a lot of other layer 2 solutions are still early days. They're not super user friendly yet, and it can be a little unstable, little bugs still getting worked out. But if you can figure it out, and if you can find a Lightning supported wallet and want to play around with it, it's a really great way of getting your transactions off the main blockchain. And he's right. Until we can do something about scaling that first layer, the second layer is a really good way to go.
Yeah, so he's doing a lot of commentary on Bitcoin, saying, how thinking of ways to improve the sustainability of it, and now with Lightning. Also, we are seeing, though, Bitcoin falling back below $37,000 amid government warnings. People are trying to assess why we're seeing the sell-off. And one of the theories out there is a top Chinese government official is calling for a crackdown on cryptocurrency mining, amplifying regulatory concerns today. Christy, though, this is nothing new, though, right?
Well, it is and it isn't. I mean, China's been keeping an eye on, and in their way, what's been going on with Bitcoin trading for a long time. And yes, the mining to a certain degree, but right now, there are some new developments. So, for example, in Inner Mongolia, their Development and Reform Commission regarding the 14th five-year plan energy consumption targets. Basically what they're doing is they're ramping up their oversight of mining facilities to make sure that they're operating legitimately and sourcing their power legally, and their leases are up to date and above board. Now, our sources are also telling us that there is possibly a shift happening in the works that will eliminate coal as a power source for Bitcoin mining, or at least try to get rid of as much of the carbon dense mining energy sources. And we saw when the coal supply was cut off due to a series of mining accidents in Sichuan, there was a significant drop in hash rate, which we need to secure Bitcoin. And many Chinese miners who use hydroelectric power sources in the rainy season rely on coal when the rains dry up. So it's easy to see why a crackdown on mining in China of any sort can make markets nervous. But here's the thing. China's mining dominance is already starting to shift, and I talked about that last week too, especially in North America. The mining industry in North America has been ramping up significantly over the past few months. And even like just yesterday, we wrote about how a Chinese mining operation, Bit Mining, the firm that runs the BTC.com Bitcoin mining pool, invested $25 million in Dory Creek to build a mining farm in Texas. So they're catching on to the North American scene and figuring out ways of shifting some of their hash rate over to North America. So all of this is happening, but keep in mind that Bitcoin's security is distributed globally. And in a way, this is compelling miners to seek multiple sources of renewable energy around the world, and that ultimately is good for its image, for decentralization, and its security.
On top of that, I just want to add it's not only Chinese regulators that are taking a critical look at Bitcoin. The U.S. Department of the Treasury is also calling for businesses that receive transfers of more than $10,000 in crypto to report them to the IRS, and the policy is set to go into effect in 2023. And that may have contributed to the market volatility we've seen, over the past few days. SEC Chief Gary Gensler also saying on Thursday that the federal financial regulators should be ready to bring cases against bad actors in crypto, cyber, and fintech. So we are seeing more input from government officials around the world. All right, let's take a break there. Coming up, more BTC discussion with our CoinDesk panel.
We are witnessing the greatest paradigm shift in finance in modern history. Join thousands of newsmakers and influencers talking the future of money at Consensus by CoinDesk. A live virtual experience of leaders, changemakers, virtual reality meetups, keynotes from Ray Dalio, Gary Vaynerchuk, and much more. Get an up-close look at the boom in crypto, the surge of institutional investment in Bitcoin, NFT mania, the breakneck innovation in decentralized finance, and the coming disruption from central bank digital currencies. Join us May 24th to May 27th for Consensus by CoinDesk.
Welcome back. Looking ahead to next week, it is a big week for CoinDesk. It is Consensus by CoinDesk. And as you were mentioning, Galen, you're hosting a panel. I'm hosting a panel. Check it out on Wednesday. It's with MasterCard. It's with Gemini. And we will be talking about crypto financial products for the masses. Brad, what are you looking forward to in Consensus?
We're going to have a lot of great speakers. I just want to follow up on what you were just talking about, Christine, with the regulators and, Bitcoin, crypto, it's this super disruptive technology, right? It's come out of nowhere in like the past 12 years. It's now, literally, we were talking about it on our morning markets team meeting this morning. It's dominating the financial news headlines. If you just read Bloomberg or the Wall Street Journal or New York Times Dealbook, like that's all they're talking about, and yes, Bitcoin is crazy volatile. It's this new thing. On the other hand, it's like the only thing that's really been making money, the past couple of years. And so there's obviously going to be a ton of resistance to it. The regulators don't really know what to think about it. They don't know where it's going. Even people in the crypto industry don't really totally know where it's going. And so you're going to have tons of volatility. And, I was just talking to a couple traders this week and saying, look, you don't make money if you don't take risk and accept this volatility. It's just the way it is with asset prices, And so, what we've been seeing over the past couple of weeks is basically what everybody's been warning about with cryptocurrencies. On the other hand, it's what you accept if you want to make big profits. You take these big risks. So anyway, my dog
your dog agrees with you.
But,
yeah. And there will be people talking about that at Consensus.
Yep. Galen, Bitcoin, hit a $30,000 low this week. have we reached the bottom for Bitcoin, or is there still room to fall?
No, there was a moment earlier today, Christine, where I thought we were going to be looking for a new bottom, the way things were going. But it seems like things are kind of consolidating around 37,000. And I think it's these periods where the Bitcoin price kind of doesn't rally following a dip where it's most fragile. It's kind of like the longer the price doesn't rally, it sort of adds to the fragility. It's kind of a reverse Lindy effect. Look, I mean, a great deal of Bitcoin's narrative right now was set in March 2020. I think investors watched how fast it rebounded from the March 12 low. It was faster than stocks, faster than gold. And that set the stage for later that year, Paul Tudor Jones and the Bitcoin fastest horse narrative. And I think, that story has held strong until this month. After you saw the Elon FUD, Bitcoin didn't really stage a dramatic rally. Elon sort of went around with the honey badger and the badger didn't really bite back. So it didn't take much to kind of scare investors. And I think we're in another one of those stages, like post dip, could break up, like could go up fast, right? But also could go the other way. It's that fragility in the price when you reach a kind of a plateau in Bitcoin. So none of us get to sleep anyway for the next few days.
All right. It's also Bitcoin Pizza Day. Remember, May 22nd, when Laszlo Hanias, I don't know if I'm pronouncing his last name right, Hanias bought 2 Papa John's pizzas for 10,000 Bitcoins, the first Bitcoin transaction for goods ever. Those pizzas are now worth over 400 million today. So people will be eating pizza tomorrow. You'll see that. Also, Christy, what's the latest on Bitcoin's Taproot upgrade? And just a reminder to viewers, Taproot is a small update to the Bitcoin network made of 2 lines of code that will improve privacy and allow smart contracts on Bitcoin. Everyone loves it, but not everyone can agree on when to activate it. But we're coming close, right?
We're coming close. And there are 2 lines of code that are tiny but mighty. Okay, this is a mighty update. So the Taproot, there are 5 chances to activate. We've been through one full period, one difficulty period. We're halfway through the second one. It's not going to activate this period because we know we need 90% of the blocks mined to have that little extra piece of yay, we're on board code attached to it, and we're not going to happen. It's not going to happen this period. Next period, which starts a week from today, chances are excellent that we will be getting the activation because over 90% of miners are now signaling. They're all prepared to have that little piece of code in there. And so a week from Friday, this could be very exciting.
Yeah.
So, yeah.
All right. We're going to have to end there. But guys, get some sleep for the weekend. You'll need it for next week because it's going to be a marathon. Thanks for joining us this afternoon.
Get some pizza.
Yeah, I got to go convince my staff to take Bitcoin.
All right, that was our CoinDesk Week in Review panel with Managing Editor of Technology, Christy Harkin, Managing Editor of Markets, Brad Cowan, and Director of Data and Indexes, Galen Moore. And that's it for All About Bitcoin. I'm your host, Christine Lee. All next week, Consensus by CoinDesk 2021 is live at CoinDesk.com. We'll have special programs and coverage of the biggest conference in the crypto industry. You can still register and get tickets at events.coindesk.com. Join me for a special half-hour edition of First Mover at 8:30 a.m. and an hour-long special at 11 a.m. Monday morning in New York. We'll have the latest coverage from Ray Dalio, Dr. Lael Brainard, Larry Summers, Kathy Wood, and more. You're watching CoinDesk TV.